Trader PhD's Commodity Chat podcast series, bringing you the latest trends in U.S. and global commodity markets, from grain prices to livestock trends, exports to weather impacts. We cover what matters most to your operation. Let's dive in.
Well, welcome back to another episode of Commodity Chat. I'm Dawson Schmidt, the head of market content at Trader PhD, and joining me again for a conversation is our ag market advisor, Nick Lawrence.
Good afternoon, everybody.
Well, Nick, kind of to break things down, we're going to go into a little bit of the June WASDE report. And before we get a little bit too into the weeds, kind of baseline, what's your reaction from it?
Relatively boring. There's a few little nuggets in there that are fun, but pretty much as expected.
And really, I mean, for a June report, especially with those bigger reports at the end of the month, probably not too much of a bad thing for it to be a little on the quieter side anyway.
Yeah, for sure. Yeah, we're going to have enough excitement here in about 2 weeks, a little over 2 weeks.
All right, so just kind of to kick things off here, again, the USDA released its June WASDE report here earlier today. Not too much of a big reaction, but starting things off in the corn side of things, the USDA did lower that 2024 and 25 old crop corn ending stocks forecast. That was lowered by 50 million bushels from the May estimate, largely due to, or I guess only due to, 50 million bushel increase in the corn export forecast.
Yeah, so export data over the past couple weeks has shown that the USDA really should increase their export demand due to weekly exports commitments showing it had already hit the previous target. So I guess it essentially had to come up.
Yeah, so then moving over to that new crop balance sheet too is that, you know, as expected, the USDA left out those production estimates unchanged from the previous month. Won't get a revision until July, just once we get that June acreage data. With corn demand, though, as well, that 2025-26 balance sheet was also left unchanged. Ending stocks, though, due to lower beginning stocks, were lowered by 50 million bushels to 1.75 billion. Again, lowered due to those lower ending stocks, which did come in below market expectations as well. On the global side, 2025 and 26 ending stocks were lowered to 275 million metric tons. That was down from the May forecast. That reduction was mainly reflecting lower ending stocks for China, South Africa, India, and Canada, but USDA didn't really touch too much on the global balance sheet.
Yeah, so speaking of the global balance sheet, we'll touch quickly on CONAB's estimates that were released this morning. They increased everything, right? So on corn and soybeans, yield was increased, yield estimates were increased, acres were increased on both corn and beans. On cotton, the yield was increased. Acres were just ever so slightly reduced, but overall production was still increased. So everything got bigger yet again out of Brazil.
Yeah, I guess not very interesting. They've just been having a really good season. That's been reflected with, you know, the good weather that they've been having, and especially as harvest had kicked off in the season. Kind of looking over at the soybean balance sheet, though, not really much to say there, just because the USDA did leave the old crop and new crop balance sheets unchanged for this month. So that left the 2024 and 25 ending stocks estimate at 350 million bushels. The new crop carryout was unchanged again at 295 million bushels. If you want to say that there was some revisions that mostly came on the soybean oil side of things, that old crop soybean oil export forecast was raised by 200 million pounds to 2.6 billion, again with that large pace of exports that we've been seeing since earlier this season. Consequently, though, again, the biofuel usage was lowered to offset that by 200 million pounds to 12.9 billion.
Yeah, so speaking of biofuels, I was sitting in here this morning about to wrap up my news scouring at about 7:30, and a Bloomberg article came across that said that the White House was done reviewing the EPA blending proposal, and that, you know, basically that is insinuating that we could expect an announcement at any time on what the RVOs are going to be. So at 7:30 this morning, whole beans and bean oil both got a big shot in the arm. It kind of got stalled out, and then, you know, after the report, it just couldn't hold itself up and it fell apart a little bit. But so just so you guys know, that was reported this morning, and I guess in theory, in a minute, we can get some RVO news.
Yeah, it's been the quote has been any minute for like the past 2-3 weeks.
Yeah,
and
but
so,
for real this time.
Yeah, possibly. So as they say, which any minute, could be literally this afternoon, tomorrow, or even a couple weeks.
Yeah.
So I mean, hopefully we get some good news there. Again, we did get some bad reactions like a week or two ago. Basically, the market expecting a lower than expected RVO announcement, but still waiting on some potentially positive numbers there coming out of that announcement. Kind of shifting things back to the WASDE report, though, to kind of carry out the rest of the soybean balance sheets. Global ending stocks were raised a little bit from the previous month, mainly due to China's crush demand being lowered. So kind of interesting that, crush pace has been pretty slow despite record imports that we've been seeing coming from China, especially in the May data, whether that's from transited stuff that was coming from April or that was a true reflection of just a stronger demand in general coming out of China. Moving on to wheat, though, the old crop balance sheet was left unchanged like soybeans, but they did, I guess I'm already messing that up. So now we officially did switch over to the new crop, which is now the old crop. So that 2025 and 26 crop. So the ending stocks balance sheet there was reduced by 25 million bushels. That was reflective of stronger exports that we were seeing.
Yeah. Also, we got a 25 million bushel increase in the export forecast, which is, fantastic, obviously. And then the USDA also cited just a strong pace in sales, just specifically for HRW. And this week's sales data showed total wheat exports and commitments are off to their fastest start since 2017.
Yeah, before that balance sheet kicked over, it was new crop sales were actually at the fastest pace since 2013. But once we officially switched over the crop years and getting the actual export data in there, kind of backed off a little bit compared to previous years, but positive nonetheless. When you look at the production data, the USDA did leave the all wheat estimate for production unchanged at 1.9 billion bushels. That did counter expectations of a slight increase. So I guess, a little bit positive there for the report as well.
Yeah. So speaking of production, there was, it basically comes out to a rounding error. Production on the surface was unchanged at 1.921 million bushels. That's up 115,000 bushel, basically off higher SRW and white winter wheat production, which is offsetting a slightly lower HRW production. So there is some minor changes kind of happening on production, but not really enough to show up in the numbers quite yet on a headline scale.
Yeah, which that was kind of interesting too, because the narrative, a month ago was maybe we'll have lower SRW production and higher HRW production, but it kind of seems like the weather forecast have really flipped and is impacting areas differently.
I do think when it all kind of comes out in the wash, I do think it's going to be interesting here how kind of SRW country fares in with all this moisture. I'm wondering if yield will be impacted in some way. Maybe just in quality and not yield, so we may not see it all that well. But yeah, definitely the roller coaster ride that the HRW crop has been on, as far as expectations, has been interesting. It's been up and down and up and down. So
yeah, and then speaking of that too, just rounding out with the global side of things, the USDA did come in with a cut to that global ending stocks number for the new crop year, mainly due to Russia's higher domestic usage. So it wasn't really a export thing. It wasn't a reduced production area, even though we have been talking about possible production concerns in different areas, but that just hasn't been reflective in what the USDA has been saying in its reports. But rounding out things here with the cotton side of things, Nick, what are your reactions with cotton? Just because USDA did come in with a 500,000 bale reduction for this upcoming crop year, putting us down to 14 million bales, I believe, from 14.5 million bales from the previous estimate. And that's putting production to be expected at the smallest or the second smallest in about a decade now.
Yeah, I don't know. I mean, I definitely don't think that story's done quite yet. They left yield the same and or they reduced harvested acres and planted, but they left yield the same. So it'll also be interesting to see how that ends up kind of panning out there. I haven't heard really anything good out of cotton country. There are some parts of Texas and Oklahoma that I think are obviously doing well, but once you start getting closer to the Gulf, I think things change. So something to keep an eye on here, obviously, for the balance of the growing season.
Yeah, and then on the demand side too, the agency, kind of surprisingly raised its old crop 24-25 export forecast by 400,000 bales. That was an upward revision that was, I guess, reflecting better demand that supposedly we just haven't really been seeing. I've been noticing that, the export side of things have been good, but the sales side of things, we're still at seasonal lows. So, it would almost have to be an extra question to the USDA as to why that happened.
Yeah, like to your point, the actual bales going out the door have been fantastic, but that still doesn't really suggest that, sales on the books are warranted an increase, and unless there's just something we don't know.
Yeah, I think the new crop year, we're off to the slowest pace since 2016 for those new crop sales. And then the current crop year, maybe not that bad, but it's still not great. We're below last year. We're below the 5-year average. It's just not a great outlook in terms of overall demand, which we've just been seeing that overall weakness in the global market. But the absence of China and them looking for other markets that it's not the U.S., looking at Brazil, looking at Australia, just not a great look for the U.S. crop in general.
No, I do think some things can change here as soon as some of these commercial warehouses maybe get rid of some of this old crop inventory. Once we get through that and kind of start moving forward with new crop, I do think there could be some value buying to be had. It's very possible that cotton's on sale. They just don't quite need to buy it yet. I think once we move past old crop, it is very possible things could eventually change.
Yeah, especially too if we're talking about potential shortages from the U.S. on wanting to make sure that countries can secure bushels. And as you always say, it's a futures market, and to kind of see that the new crop carryout estimates are, I guess, coming down at a faster rate than what we were kind of seeing over the last couple of months. That's got to be positive in itself.
Yeah, it's always positive when, stocks-use ratios are trending down, right? So over time, we'll just kind of have to watch this trend.
All right, well, that's going to wrap it up for talking about the June WASDE report here. Again, if you're ever wanting to go in a little bit more detail and see a little bit more of those numbers and those tables and charts, feel free to check those out in our mobile app. And also, again, I'm going to tease that we're going to be sending out our June acreage surveys. So be on the lookout for that here in the next week or two. Wanting to get a little bit more of a idea as to what farmers actually planted this year, looking at corn, looking at beans and wheat as well. So again, be on the lookout for that. And for that, I'm Dawson Schmidt.
And I'm Nick Lawrence.
And this has been a Commodity Chat from Trader PhD.
Past performance is not indicative of future results. Futures trading involves substantial risk and is not suitable for all investors.